Good afternoon, guys. All right, didn't do a trade review yesterday. We had one singular options trade yesterday morning, so it wasn't really worth reviewing. Today we had a whopping two. Now, today wasn't a very big green day, unfortunately, because options were chopping a ton. We'll get into that. But I'm going to review today's and yesterday's pre-market analysis and kind of all the thoughts that went down behind all of those trades. Starting with yesterday's. So this is what the market looked like 1 minute before market open. As you can see, we didn't really have any major pivots anywhere near. Nowhere near at all. We had some pretty minor ones. This is an extremely minor one here. The next decent one we had was a cluster here. And then a little bit more here. As far as where price action is right now, not really any pivots near. So just pure supply and demand, I am more bullish for supply because we're closer to supply. If we start falling, I'll be bearish to demand. But aside from supply and demand, I don't really have any solid price targets at all. So it's not looking like there's going to be much for setups this particular morning. Now the 1 minute looks a little bit better, but not much. Still not much for pivots. So here's the market open. We exploded the upside. Didn't really get to take the calls to supply that I wanted. Kind of what I was thinking is, okay, well, if we invalidate majority of this move, I can enter, well, if we invalidate majority of this move, by default, I'm leaning bullish to this high, the nearest point of liquidity. I can actually continue it to supply. That's kind of what I was thinking when this candle started, but this candle ended up being way too large. So, and then this candle happened. Now this was a really interesting candle, and this kind of created some decent opportunity. This is the 731 candle, and you can see that NQ was a lot stronger than ES. And we actually did have it's a minor pivot, but it's the only one we have anywhere near, and it is a supply cluster. You can see it on the 1 minute. It's not a huge deal. It's just the top of, pretty much bearish consolidation, but it's all we have. And it is a supply cluster as well. So it's not a terrible area to go to. Okay, how long is it going to take me to get there? There we go. So flip super strong on NQ. Right now it's either Q calls or SPX puts. Then we get this candle. Okay. If we invalidate this red candle, I'll enter half size calls. Not full size, but half size because it's indicative of bullish consolidation. Now I'll go full size if we complete a second oscillation. This is one full oscillation. I'm willing to get in with only one oscillation because of a couple things. Obviously, we have a very strong trend. And on top of that, NQ is a lot stronger than ES. So trend plus a lot of strength really increases the odds of the trade. I'm willing to enter after just one oscillation, but still has to be half size. I have to save room to average down or average up. And that's what ended up happening. I entered right as this candle invalidated this red body here. And this is pretty much what the first trade looked like. Still able to add and all of that stuff. So I'm kind of waiting to add my second half. Well, we end up putting in this terrible selling wick, and that is not good. And then we try coming back up. It looks like NQ's magically trying to flip weak right after I enter. And I say, ugly selling wick here. Was it this one? Yeah, it was this one. I say ugly selling wick here, but if it invalidates, I will add my second half for an average up. Now, it almost invalidated there. Didn't quite, but I tell you guys in advance, when this selling wick invalidates, right when it's about to invalidate, I'm averaging up. And that's what happened. So I took my ad here. That raised my average to roughly here. My stop loss was pretty hard, right around right here. And now I'm in with my normal position size. Unfortunately, it rejected. And the calls were chopping really bad. Okay. Even though it was supposed to be an average up, it wasn't actually an average up. My average didn't change. I think it was actually an average down, believe it or not. I entered these calls at 60 cents initially. I don't remember what exactly my ad was, but I know when they got all the way to PT, at least for my initial entry, and I'll go back to my initial entry, which was right here, I got a whopping 13% gains. Now I'm still bullish. The chop was horrendous though. Like horrendous. I mean, I only flipped green on the trade at the top of this green candle. So it was much better for futures than it was for options. Options was not good. And when the contracts are chopping that much, even though I could still be bullish, I still have to sell a majority of the trade. So sold the majority of the trade here for a whopping 13% gains. And sometimes when the chop is extremely severe, a huge short squeeze or stop loss rate will end up happening. In this case, it'll be a short squeeze. I'd say it happens 30 to 40% of the time, but I still have to trim because, if I'm wrong, and I'd be wrong a majority of the time to hold the entire trade for more, I'd end up selling for just an incredibly massive loss, like 70 to 80%, and I don't do that. But left a runner position in, and ended up doing pretty okay, as you can see here. It did very nice. Ended up getting all the way to 83% gains. My runner PT was this next supply, and I sold it. I don't know. I don't remember if it got much higher. Yeah, it did a little bit. I sold it right when it got to here. 83% gains. Ended the day pretty small green because even though my runner position did pretty well, it's still a runner position. It's just only a few contracts, so it didn't raise. I think my average win on that trade went from 13% to maybe 25%, maybe. But I called it there. The contracts are too choppy. I was out of bias, didn't really have any pivots anyways, and that was my entire morning before I moved on to futures. I'm assuming no one really has any questions there. Tim's asked, can you cover a bit more on entering QQQ versus SPX due to divergence? It's literally, yeah, it's just strength and weakness. Whichever one's stronger or weaker, Tim, based on the candles. On the last handful of candles, which is stronger. But if it's close to even or NQ isn't clearly stronger than ES, I'll choose SPX for the tax reasons and no wash sale and all those things. So I try to prioritize. SPX if that makes sense. But yeah, it's purely a strength and weakness thing. It just increases the odds of my trade working out just a little bit. All right. So today was the same story as far as chop. Today's chop was unbearable. And I'll show you guys a little bit of what happened. Here was the pre-market. We had a bearish liquidity sweep up here. Doesn't really mean anything for me though. Here are the pivots. We have some okay stuff. Okay. So we have a little bit more pivots to work with here. Not very biased either way though. We have decent demand underneath. We're in supply, but the supply is huge and old and we've been through here, so I don't think it's very impactful. Just this overlap, this second 2-hour zone up here is impactful. We do have a gap. I'm not going to trace out the whole gap. That's too much work, to be honest. But we do have a gap up here. It's a small time frame gap. So that's my first bias. If we invalidate majority of this drop, I'm always bullish for futures gaps to fill. Not only will I take calls for this high, but I'll take calls for the gap fill and potentially supply. So that's my first bias. If we come up, I plan on doing that. However, NQ had a really, really big pivot today. So here's a major pivot on the NASDAQ. And here's another one. Just one singular tick below this pivot. For NQ, that's pretty damn close to perfect double bottom. That's a really big deal to me. So my main sentiment was, if we come anywhere near this area, right? We come anywhere near here, even though it's in heavy demand, I'm going to be in puts for that pivot. Now, last time that happened, or the last 2 times, No, the last time that happened, I ended up losing money, but still got in anyways. But those were my two major biases, and my best pivot by far was this one. That's why I kept talking about it. Now, right away at market open, I just told you guys in QQQ puts. All you guys have been with me for a while. I don't need to tell you what contracts I'm in. You know what contracts I'm in. And for the millionth time, I only trade 0 days. I only trade SPX or QQQ. I always enter my SPX contracts between like 2.4 and 3.0. And I always enter my QQQ contracts between like 50 cents and 80 cents, right? I don't I choose my strike purely off price because it doesn't matter. The theta is going to decay the same with these trades that last 5 to 10 minutes. So I said QQQ puts halfway down this candle because, and that's one of the beautiful things about what I do is I tell you guys my plan before it happens. So when it happens and if it happens fast, you can get in because you've been briefed on the plan. You should know what I'm going to do. You shouldn't be, sitting behind your screen, sucking your thumb and picking your nose, waiting for me to send a buy alert and then bitching to me in my DMs when I didn't send the full contract. Like, be an adult, right? Sick of those people. Told you guys what I was going to do. I said in QQQ puts, you guys should know what contracts I'm in. But frankly, it doesn't matter what contracts you get in. If you're in 0 days and the contracts aren't near worthless, you probably have the same result. Now, I filled here, somewhere around here. And this is my main PT. Now, I didn't fill everything, right? If this demand wasn't here, I would be in full size. But you guys know me. If it moves really hard right at open, I'm pretty much always in half size. This time's a little bit different though, because we have pretty much a perfect double bottom right here, which is a really big deal to me. So I filled a little bit more than half size, but I scaled into the rest pretty quickly. And that's pretty much what I did. I scaled into the rest really right here. It didn't really change my average much, unfortunately. And I think my average was something like this. I don't know. But anyways, pretty much gray is my stop loss. Again, I'm trading options, so I don't have hard stop losses. And I'm like, yeah, I just got hornswoggled, didn't I? Because that's a pretty dang bullish liquidity sweep. And you can see here, NQ just flipped stronger than ES. Invalidated much more of this green. I mean, the green candle invalidated much more of this red body than ES did. So I told you guys I'm probably going to stop out. If this candle opens green and validates a selling wick, I'm out. And I'll just have to be back in if we re-enter. That'll be like the third time in a row that's happened. But it didn't. And I added more, so I actually ended up a little bit above my normal full size. I was like 1.25x or something around there. I told you guys in chat, I added a little bit, but then we bounced really hard, so I cut myself off. I told you guys if we somehow come back down, I said, quote, adding rest if this bounce invalidates. But that's a super bullish bounce, so I'm not thinking it'll come back down. It's exactly what I told you guys. It came back down, added, and then ended up getting my price target. So that was pretty good. I sold most when it, broke through. Look at this. Got 27%. My initial fill was at 68 cents. My main ad was 65. My average was somewhere around 66 or something cents. So 27%, not very good. Like, the contracts just aren't moving much though at all. I ended up selling the rest when we bounced. And now I started looking at SPX puts a little bit. This was a pretty big pivot. This was the biggest pivot. And you could see as we bounce, NQ's invalidating more and more of the red candle than ES did. So ES is immediately looking weak. I tell you guys on this bounce that if most of the bounce invalidates on SPX, I like SPX puts personally. This is why. Look at the selling wicks on the way up. Look how much weaker ES is than NQ. NQ is way more than cleared this red candle. ES is still within it. We did just miss a pivot by a little bit, and this is a very big pivot over here. And I filled. Filled halfway down this candle. Just again, I told you guys as it was bouncing, I am in put. I like SPX puts if we validate most of this bounce. That's most. Fill the SPX 68.55 puts at 2.8. And these were hell. The chop was insane on these. It got to where I needed it to go. But right here, I was up a whopping 17% when I sold. Like the chop is ridiculous. I was red on every single. We went straight down since I entered. Straight down. I was red on every single candle until this last one, where it popped up and got me 17%. Just to put this into perspective, okay? This right here, this bottom was at 3.3. I entered here at 2.8. The lowest it got right here, the lowest it got was, I think, 3.4. Like really, really bad chop. And when that happens, just like yesterday, it just turns me off. I don't like being right and then not. It's one of the worst things with options that happen sometimes is you're right 100%. And keep in mind, like I've been doing this for years, like a lot of years. It doesn't happen very often. And everyone knows contracts chop, but even though they're 0 days, I'm only in the trade for 4 minutes and it only goes my direction. I shouldn't be experiencing that much implied volatility decay. So anyways, that pretty much just turned me off because that's the second day in a row I got chopped out like that. And it's really frustrating when it's moving your direction and your premiums aren't going up because right here, I got 17% gains, okay? But if this stops out, well, if this is 17% gains, if it bounces to here, I'm break even, or roughly here I'm break even. And then if we go to my actual stop loss, I'm down 50 freaking percent on the trade, 40 to 50%. So it destroys your risk to reward. And when I see contracts doing that, it makes me become feel a lot more conservative and pull my risk out and away from the markets because I can't construct good risk to reward trades with how the premiums are operating. It's not really a thing in futures. And a lot of you guys trade futures, so you don't really experience that. But that's kind of why these days have been ending kind of short. More so yesterday. I only try to trade the first 30 minutes to an hour each day and make money and leave. But yesterday and today, both days in a row, pretty bad chop. So I left. Unfortunately, it did end up dropping a lot. I mean, this was chopped to hell, though. I mean, this is contracts were getting absolutely destroyed. We did end up dropping a ton, though. It ended up being a pretty bearish morning. Not that I really ever trade past this level, nor would I have been confirmed in to a trade, except for right here. And I did call this out in live voice this morning, this glorious pennant, but it was in between my options and futures time, unfortunately, so I had to miss it. But aside from this, I wouldn't have had any other entries, so. But regardless, doesn't really matter. Pretty much nothing but green days lately, and that's really all you can ask for at the end of the day. So that being said, does anyone have any questions regarding anything that I discussed thus far? Rakai says this insane options chop is why I don't understand why people want to trade options. It just opens you up to unnecessary randomness. Well, that's not really the case, right? So there's always pros and cons to everything. Options, the most you can lose is 100% of your money of any given trade. So your options losses are significantly smaller than your futures losses, like significantly. And when you go on tilt with options, especially if you have a proper cash account and you don't fall into the margin trap, when you go on, as far as live trading goes, futures you can lose all your money in a single trade and go negative. Options you can't go negative. You can't get margin called trading cash options, right? And options, because of implied volatility, you double your money a lot more often than you do on futures. So everything has pros and cons. It's pretty equal, to be honest. Futures is just easier. It's what I recommend for new people because it's easier to learn, and your blow up days aren't going to be as expensive. But at the end of the game, at the end of the day, to the experienced trader, uh, options honestly makes you just a little bit more money. it has more upside to it, but futures is better to learn and develop with. But all right, futures also nice for the tax reasons too. Yeah, options. The general options traders that alert Apple and stuff are just setting everyone up for failure because even if you win, you're gonna get wash sailed out and you're gonna owe more money on taxes than you have. If you just trade SPX or your market to market elect, options is freaking fantastic. But that's another perk of futures is Section 1256 contracts. Only SPX and NDX options are. All right. I will post this on YouTube. I'll let you guys know when it's posted. And yeah, solid day today. I'm going to continue working on what I'm working on. It's pretty much always what I'm always doing. I'll have probably an update for you tonight. We'll see if not tomorrow at the latest. And like I said, my goal is we start testing our new system by this weekend. So I'm looking forward to that. Right. I'll see you guys later. You guys have a blessed rest of your day.